Hello traders, and welcome to the Friday wrap-up, September 18th, 2015. On a Friday, great to be with you for the Friday wrap-up as we're going to look at about, almost 20 daily charts, and we're looking for price action. Traders, I'm coming to you live from Pattaya, Thailand. Bright blue sunny skies, white sandy beaches finally after about 5.5 days of rain. It's good to have some sunshine in the morning. Traders, is brought to you through FXCL Excellence in Trading. Got a lot to do today. It's going to be a little bit long. And before we get started, let me introduce myself to you. My name is William Gilday. I'm your moderator for the Friday wrap-up and also the market opening preview, which we do every single trading day before the London Open. Traders, I started trading in the year of 2006 and 2008. I retired from a wonderful 27-year career in the fire rescue department out of the great state of Florida. Traders, 9 days later, I came to Thailand for a 3-month holiday. Well, it's 8 years later, and I'm still here. Absolutely loving living in Asia. And if you trade Forex, the time zone is absolutely great. It's just like going to work for the day. Start at 7 in the morning, end 10 or 11 o'clock at night. And no, I don't sit in front of my charts for all that time. I do get breaks, and 2 hours here, an hour and a half there, and it just depends on what's going on in the markets. So I'm always looking for opportunities and probabilities to have trades benefit me on the win column. And no, I do not win every trade. Trust me on that one also, traders. I guarantee that. So that's what I'm all about. Let's get the legal stuff out of the way. This is a risk disclaimer. Forex trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Traders, most importantly, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, traders, let's go to commentary. It's really great. I'm actually sitting on my balcony doing this video this morning. Absolutely gorgeous outside today. Can't wait to get out. It's about 8 o'clock in the morning, my time, Thailand time. So that should be 9 p.m. on Friday night. So it's Saturday morning for me. All right, so we had this big FOMC conundrum, and they didn't raise interest rates, and the markets went crazy. And you're going to see the charts are starting to come around it. However, the markets didn't like it. The U.S. stock market did not like it. Let's take a look at the indices real quick. The U.S. 30 is down 1.74%. The S&P 500 is down 1.81%. The Nasdaq is down negative 1.38%. With the small cap 2000 is down 0.77%. You know, that's not something you want to look at. Look at the Eurozone. Again, all in the red. The DAX is negative 3.08%. The FTSE 100 is negative 1.34%. The CAC 40 is negative 2.58%. The Eurostoxx 50 is negative 3.03%. It's just absolutely amazing how that works. All right, let's take a look at what happened at the Asian close yesterday. The Nikkei 225 closed negative 1.96%. The S&P ASX 200 out of Australia closed positive 0.46%. The Shanghai was up 0.42%. The Hang Seng was up 0.30%. And the Kospi out of Seoul was positive 0.98%. So it looks like the Asia zone was the winner yesterday. All the rest of them were in the red. All right, so what's going on as far as our week's going to, come, and before you know it, it's going to be Monday and you're going to be back at your charts. So the big thing I think we need to look at is that they made this decision with the FOMC, and the markets did not like that reaction, and they basically, whipsawed it. But it's pretty funny that how, the Dow closed and the S&P closed on a weekly low. Everything closed on a downside yesterday. So that means we have to wait till Monday's New York session to see, I think this is all in a correction mode now. I think all this is going to start to correct itself. So now what happens is you have everything at the lows. So, not that I like listening to these, they call them gurus, people on like CNBC and Bloomberg saying, well, now's the time to buy, because basically with the low, the dollar's weak, and the dollar's going to get strong again. And that comment I do agree with. I think we're going to see an upside in the dollar, and the dollar will regain strength pretty quickly. I don't think it's going to take long for the dollar to regain its strength. So my commentary is, you know what, we'll get over this, and we're just going to trade what's in front of us. We'll take a look at some of these charts, and just remember that these are daily charts, and you know, the focus is price action. That's what we're looking for. We're looking for price action. That's the most important part of this series, is that we're looking at price action and what we can expect in the week ahead. All right, let's get started. These are all daily charts. That means every single candle on the chart is actually 24 hours in duration. Let's look at the dollar Swiss. You can see on Thursday, which was the announcement, the big red candle. What happens yesterday comes down, comes to the 200 exponential moving average, and then heads its way back up again. So there was dollar strength regaining on the dollar Swiss. Now, if the dollar Swiss is up, we know that the euro is down. So we'll take a look at that in just a second. So, you know, how would you trade this? Well, I would stay with the trend. You know, the trend is in a downtrend, and you know what? We're just going to continue to trade this to the downside. So even though we do have a big blue candle to the upside, you know, we're still in a downtrend for the last 7 or 8 days. And if you put a trend line there, you know, I would be looking to trade this back down to this 200 and let it retest it again. And I think that's a very good possibility. I did not look at what data is coming out. Here's a pound. Pretty crazy. The pound has been bullish last week, and you know, almost 2 weeks now. The pound has been really bullish. Now the pound is bearish because, again, the dollar has rebounded. You know, you can see on Thursday it was a blue candle after the data came out, and now it looks like the dollar is taking over, and and definitely has some strength here, and that's why we're seeing this red candle. And you know, I don't think the pound is going to get weak, that's for sure, but I think it's going to be interesting on Monday to watch how the pound reacts. So here we see another chart. Now, this is the second one in a row where we see the dollar has rebounded and taken control of that currency pair. So it's just something to watch. However, I'm still, you know, the pound was bullish, and, you know, the pound's been hard to read. But overall, the pound has been bullish. So we'll see how this reacts now come Asia and Monday, and see how we open. So I like to call it Observation Monday, where we basically are going to look at what happens on Monday, make some decisions on what we're going to do come Tuesday for actual trading. Here's the euro dollar. Look at this. Okay, Thursday, blue candle up to resistance. Isn't that amazing how that works? That yellow line, that's a resistance line. And then yesterday, what happens? Total dollar strength. Okay. Euro weakness, dollar strength. This is probably not dollar strength. It's probably euro weakness more than dollar strength on this pair. But you know, the euro is bearish, absolutely bearish. You know, it closed at what does that say? 1282. 1282. This went all the way back up to 1635 2 weeks ago. At this news release from the FOMC, it was I think it actually hit 1500, 1.1500, and now it's back down to 1282. So it's almost taken back everything that it lost in that news data. So you know, this is a good indicator that, you know, price action is going to resume where it was in 2 or 3 days. Everybody's going to forget about what happened with the FOMC, and they're going to just move on. Okay, here's the dollar yen. Now, I do not have a dollar chart on this platform, so I want you to take a really good look here at this dollar yen, because this is showing you what the dollar is doing. So we've had some dollar weakness, but however, look at yesterday. Look at that last candle. We end up as a doji, so the dollar was weak in the beginning and then pulls back to the upside, and we end up with this little doji. So I'm expecting to see a blue candle here Monday or Tuesday, and this to continue up to that resistance line, and then it's just going to battle it out some more. I have to be honest with you, I did not look at the economic calendar to see what kind of events we have coming up next week, but last week was pretty dull in numbers, so I would expect we're going to start to see some numbers come out next week, and we'll get this figured out. However, this is in a nasty range, and like I said, the dollar is just maintaining. It's not obtaining. It's not getting any stronger. So it got weak on the data, and now it's almost back to where it was prior to the data. It's pretty crazy, huh? How that works. Here's a dollar CAD. You know, this is just in the range, just been absolutely sideways, a dollar CAD. And I think this has more to do with oil than anything. You know, the CAD is very reliant on oil and yeah, with oil prices in this $45 to $43 range for a long time. You can see it here with the dollar CAD, how this is also in a range and it's not moving very much. If you look at crude oil and you look at the dollar CAD, you should see some sort of resemblance there. And we've been in this range with oil for quite some time, and we'll just see how that works out. Okay, here's the Aussie dollar. Look at this. I almost got stopped out on this. You can see the top red line there's my stop out, and it didn't stop me out. And now, like, I'm in minimal profit here. Looking to take it to the downside. This is Aussie dollar trade. Listen, I'm bearish in the Aussie dollar. I've been bearish in the Aussie dollar for the last year and a half. I have no intentions of buying the Aussie. Remember, Forex doesn't move in a straight line, and it's going to correct. And the last 2 weeks, it's been, bullish. And that's fine, but eventually what's going to happen is the dollar's going to take back over again, and they'll spit out some bad numbers, and, this will end up coming back. Because the Australian government doesn't want this to come back. They want to be at 65. They don't want to be at 71 or 70, 86 or whatever they close with. But they don't want to be at 71 or 72. They want to be at 65. So, they don't like the up this high. And it's just going to come back down. I mean, we have 2 dojis, Thursday and Friday, so we'll see how that works. But I'm only bearish. Going into next week, I just want to sell the Aussie dollar. Here's a euro pound. Okay, this is a great example here. How this is like 2 magnets, putting them head to head, and they're just battling it out. The euro is strong one day, the pound is strong one day, but now they've both been strong in the last couple of weeks. So basically, now we just have this nasty range on the euro pound. Now, I don't trade the euro pound, and not that I don't want to. It's just a pair that I really never looked at trading, but I do use it as a tool. And same thing like with the dollar yen. I use it as a tool more than I use it as a trading instrument. So I don't trade it. It's not one of the 8 currency pairs that I trade on a regular basis. And now you can see why. However, if you look at yesterday's candle, I mean, this euro weakness, that's a big candle. And isn't it amazing? This isn't coincidence. If you look at that 200 exponential moving average, look at how many candles have come to that 200 exponential moving average and has been rejected. It might have gone through it and come back, but they've all come back below the 200 exponential moving average. On a daily chart, that 200 is very much respected, and that's on all currency pairs. You got to respect the 200 exponential moving average. If you watch all those financial channels, when they show charts, one thing they always show is the 200 exponential moving average. This is a pair I do trade, which is Euro Aussie. That's been all over the place, and now you can see why. It's in this nasty range, and it sold off yesterday. And like I said, this has just been all over the place. This has not been a fun pair to trade. It's been very difficult. I actually stayed away from it. So we're in this nasty range on this daily chart, and basically you can do two things here. You can stick a trend line on the bottom and trend line on the top, and wait for the breakout. This is a lot of pips here. So we had some euro weakness, Aussie strength, and isn't it funny? We just looked at the Aussie before, and the Aussie was strong, and then here it is again. The Aussie is strong, but the Aussie isn't going to stay strong. It's going to come back down. So, interesting, as I have to say. Very, very interesting. But at least when you look at a daily chart like this, and you can see that this is in this kind of range, all these indecision candles and spikes and stuff like that, this is a daily chart. So when you see a big blue candle like that, you're looking at 100 pips or 80 pips. So it's a lot of pips. So when you go down to your 30-minute or 15-minute time frame where you enter or exit a trade, this makes a difference. And you just have to watch for that. Here's the Euro Swissy. Again, sideways, nothing really here to talk about because they're inverse with each other, right? Euro goes up, Swissy goes down. Euro goes down, Swissy goes up. They just go opposite of each other. It's been that way for years, and that's just continuing. But again, this is like 2 magnets, and you can see for the last week and a half, they've just battling each other out, and they're just sideways price action. Is Euro Yen? This pair is bearish. This pair is very bearish. It's been bearish. We've had a couple of up days. Looks like we had about 5 days of up days, and it came down for 2 days. At the beginning of the week, and then we had Wednesday, Thursday we had up days, and then look at Friday. Euro weakness, and this thing just dumped down and actually got below and closed below the 200 exponential moving average. So this is a really good sign here. This is a great sign here that that this is, if you look at this, spatially, from way back, that this is bearish, that the euro yen is bearish, and this just proves the point that with this big red candle is taking out probably 4 or 5 candles, and engulfing bearish candle here, and I'm just looking to sell this. This is a sell trade in my book, so we just want to sell this euro yen going into Monday and Tuesday. Just be careful on a Monday. Here's a dollar Swiss. You remember the euro. Look at this candle. Wow, that's unbelievable. They had data yesterday, if I'm not mistaken. I think the Swiss had data yesterday in the New York session. I don't remember. But that's a pretty big blue candle there on a daily chart, folks. That is a huge candle. Yeah, that's quite a move there, I have to be honest with you. Yeah, that looks like a news candle to me. That's not your typical daily candle right there. But again, here's your dollar strength, Swiss weakness, and there we go. And again, look at that 200 exponential moving average. It's sideways, the 200, and look at how price reacts to it. It just reacts to it. But overall, this is a pretty ugly chart, right? This is a pretty ugly chart, and I'd rather buy the dollar than buy the Swiss franc. That's for sure. I don't want to buy the Swiss franc. I'd rather buy the dollar myself. All right, let's take a look at the CAD yen. Not much here. This is just sideways price action. Again, the CAD is just fluctuating because of oil. The CAD is running this chart, and it's in the sideways price action. And until we get get back to normal, and we will, folks. I was, aggravated, when this data came out with the Fed, and but you gotta get over it, move on, and get back to what we do, and what we do is we trade forex, and that's just part of macro trading. We do trade the world, and oil is ruling this chart. As long as oil stays in that range and doesn't break out of it, guess what? Your CAD yen and your dollar CAD are going to stay in that range too. Whether it's good or bad, that's what it is. I would not have this on my list of pairs to trade. Looking at this chart, here's the old beast. Here's the pound yen. Not a good looking chart, to be honest with you. However, it is bearish. It is bearish. It's had some up days, and then yesterday it shows yen strength here coming back down. However, yeah, this is not a pretty chart right here. The pound is strong, and if you look at it spatially, this is a bearish chart. This is bearish. So I'd watch this. I wouldn't look at trading this until Tuesday, because you're going to have to see how this reacts with this 200 exponential moving average. And if we get a higher high and a higher low, then we're back into pound strength. So we're just going to have to watch. But then again, on the yens, you got to watch these yen pairs, because the yen pairs, they're getting ready to do a stimulus package, another intervention. It's coming, folks. It's coming. Kuroda's been talking the last 2 days, and they'll all talk. Even their Prime Minister Abiy has been talking, and you just got to be careful, because they're getting ready to do it. They always do it when you least expect it. Here's the Aussie CAD. Pretty interesting, huh? Because the CAD is weak, you expect this to be a bullish pair, and it is. It's bullish, and now we're coming up to some significant resistance line, and now you have what we call weak against weak, and you don't want to trade this, right? The Aussie is weak, as a whole. The Aussie is weak, and the CAD is weak, again, because of oil. And you got to wonder, like, what's going on here. So this is like, again, two magnets. Look at all these indecision dailies. Tuesday, Wednesday, and Thursday, all indecision. And yesterday was, we end on Friday with a decision candle. So just be careful you're going to trade this, because, like I said, this is weak against weak. Here's an Aussie yen. I trade on a regular basis. I really like trading the Aussie yen. It's a bearish currency pair. We did have looks like close to a week and a half of upside, and I expect this to continue to the downside as the Aussie will get weak again. It's been strong. It's had its hurrah and its hooray, and we expect this to come back down. So I would be looking to sell this. I'd like to see a nice red candle on Tuesday when you come to your charts. Okay, here's a Swiss yen. Again, bearish formation here, and it looks like it's doing exactly what we want. Nobody wants to buy the Swiss franc, folks. Sorry for those of you who use the Swiss franc, but nobody wants to buy your currency. And, it is what it is what it is. So, if you're going to trade this pair, you just want to sell it. You want to sell the heck out of it, right? And people did. If you look over left of the chart, look at all those down days. Came up, went sideways, now it's back down. And that engulfing bearish candle is taking out like 3 candles. So, this is bearish, and all I want to do is sell this. And if you look at this chart, spatially, it's very bearish. Here's a Euro CAD. Not much to say on that, really. It's sideways. I'm not really interested in trading it. I don't even know why I put it on here. It's not a pair that I look at, but, it's, I don't know. Sideways. Looks pretty ugly to me. And then ending our days with our New Zealand dollar. Now, don't be fooled by this, folks. You had this up move for a while here, but just remember that the New Zealand dollar is bearish. This is a bearish pair. If you took this chart and expanded this chart out, this is extremely, extremely bearish. And don't forget that. This is bearish. You don't want to be, I wouldn't want to be buying the Kiwi. I want to sell the Kiwi, okay? So you see the big red candle from the FOMC. Yesterday, profit taking, position squaring, all that stuff. You get a blue candle. Okay, Monday, Tuesday, I would suspect we're going to see another red candle, and it's going to get back to its bearish modes. And traders, that wraps up our daily charts. Wow, went pretty quick. We're definitely over time, over the 20-minute mark by 2 minutes. Traders, I want you to remember that this is brought to you through FXCL Excellence in Trading. And if you would come visit us at fxclearing.com for your trading solutions. Traders, on behalf of myself, William Gilday, and our great friends at FXCL, we wish you a happy weekend and enjoy your weekend break. Don't forget to do some Forex homework before you start trading in the next Asia session. Take a look at some charts and do some analysis. And you know what? Most of all, enjoy your weekend break with friends, loved ones, neighbors, and even the guy driving down the road. Wave for me, wave for you, and say hello. Traders, have a great weekend. Enjoy yourselves. Get out there. Enjoy the rest of summer as long as it maintains. Take care, folks. Have a great one. Bye-bye now. See ya.